Good morning. Welcome to a Policy Genie webinar on unclaimed amounts in the Indian insurance sector. Before starting this webinar and introducing our speaker for the day, I want to just establish as to why we are discussing about unclaimed today. Is unclaimed really a problem? And what is unclaimed? So let's start with what is unclaimed. So there are amounts that are available with banks, insurance companies, mutual funds, NBFCs that are rightfully that of either the depositor or the investor or the policy holder. And for various reasons, they remain unclaimed. And this, over a period of time, has become slightly bigger. So is this a big enough problem to have a discussion around it? Definitely yes. So let me give you some statistics about how big this problem is. As of December 2020, the total unclaimed amount in the insurance sector in India was about 24,586 crores, right? And in the last 4 quarters, from December 2020 to December 2021, this figure has grown roughly by about 15 to 16%, which means that today we are talking of roughly about 28,000 crores of money that's lying unclaimed just in the insurance sector alone. Just in the insurance sector alone. If I add other segments of the financial services sector overall, this number will become even bigger, right? So why is this remaining unclaimed? What are the things that insurance companies have done to resolve this matter? How does this amount, finally find its way to the rightful stakeholder? These are some of the questions that we are trying to discuss and debate in today's Policy Genie webinar. Today's webinar is completely focused on the unclaimed amounts in the Indian insurance sector. I'm delighted to welcome Mr. Jitin Parekh as the industry subject matter expert and speaker for today's webinar. Jitin is the company secretary and chief compliance and legal officer at Aegon Life. He has close to 26 years of experience in legal, secretarial, and compliance functions. Before joining the corporate sector, Jitin was partner with Mrs. Parekh and Associates, who are company secretaries providing advice on corporate laws to over 100 listed and non-listed companies. In the last 12 years with Aegon Life, Jitin has overseen various functions of the company in addition to the core areas of legal, secretarial, and compliance. Jitin is a fellow member of the Institute of Company Secretaries of India and has a degree in law from Mumbai University. He is also a certified investment banker from ICFAI Hyderabad. Jitin, welcome to today's webinar. Thanks a lot for taking time to discuss on this very important topic of unclaimed. So let me just start off, Jitin, by asking you, why has this become such a huge problem? I just gave some figures of how this has become a 28,000 crore rupee problem. Why has this become such a huge problem, and what has been the historical events that has led to this? And if you can also share some of your insights about what the regulator or what steps the regulator has been taking over the last few years to address this, that'll be great. Jitin, over to you.
So first of all, thank you, Ravi, for inviting me. It's my pleasure to be part of this webinar, Policy Genie webinar. And hello, friends there. Hope you all are safe in these challenging times, which is hopefully now going to die down, looks like. Yeah. And thank you for giving the brief of unclaimed amounts in insurance and BFSI sectors in India. Right. I will touch upon the insurance part of the unclaimed. So yeah, you rightly said that unclaimed amount in insurance sector is about roughly 40 to 50% of the total outstanding unclaimed amount in the BFSI sector. What I mean is banks and other financial institutions. Right? Before I go into the insurance sector challenges, a similar challenge or similar problem used to be there for Indian public listed companies, where dividend used to remain unclaimed for years altogether, right? And it was a huge problem. In 2001, the Ministry of Corporate Affairs came out with, Investor Division and Protection Fund guidelines, whereby all monies were transferred to IPF fund. And as we speak today, because of the depository system, which is available in India now, and all the depository accounts are linked to a bank account, operational bank account, I think that problem of dividend is largely gone now, or it is, resolved. So that's a shining example of how the non-BFSI sector industries, especially the listed companies, have resolved this challenge, right, which was huge at once upon a time. Coming to insurance, obviously, as you mentioned, there are about 25 to 26,000 crores lying with insurance companies. Uh, the challenge is, twofold. One, we do not get insurance is a long-term contract, right? And it typically runs into 10 to 15 or 20 years at times contract. And policy holder at times changes the address, closes the bank account, and they typically will not update these details with the insurance companies, right? And because of that, the amount remains unclaimed, right? And ultimately, we are not able to, provide the amount to the rightful policyholder at the time when he was expecting this. Okay, so that is the challenge we have. As far as regulators, and I will talk about IRDAI, who is sectoral regulator for insurance companies, what steps they have taken to ensure that one, the amount gets reduced, whatever is lying in unclaimed, and two, how, as an industry, we ensure that these amounts do not go into unclaimed bucket at first place, right? So today this problem is huge, and we are all discussing, debating. But I think IRDA way back in 2010 recognized this as a upcoming problem or a challenge. And way back in 2010, they came out with a circular that insurance companies are required to show unclaimed balance in their books under the current liability schedule of the balance sheet as a separate amount. And therefore, the disclosure started way back in 2010. They also mandated that once you transfer this amount to unclaimed account, you cannot take it out at under any circumstances. Uh, Obviously, that was the starting point way back in 2010. I think the other step they took, and proactively they are taking these steps over a period of time, unfortunately, is not helping in reduction to that extent as expected. But these are steps in right direction, I would say. So in 2014, they first time came up with a broad guidelines where they saw that in 2013, end of 2013 financial year, the total unclaimed amount in insurance sector was about 4,000 crores, 4,700 crores roughly. That was huge at that point of time, and that necessitated the a detailed circular around how do we treat unclaimed in the insurance sector or with individual companies. The circular mandated reporting to the policyholder protection committee of the company audit committee, so that it gets right attention at the board level, right? That is one. It also mandated that from 2014 onwards, we are compulsorily required to obtain the bank account details and verify the bank account details. It also suggested and directed that all the payouts to the policyholder should happen only through electronic mode. Right? These were the steps taken way back in 2014, and as I mentioned, the amount roughly at that point of time was about 4,700 crores, and today it has increased. So somewhere these steps are not fully able to counter the problem that we are having. You are on mute, Ravi.
Hear me? Are you able to hear me?
Yes.
Lovely. Okay. So what you're saying is what was about a 4,500, 4,800 crore problem in 2014, by the end of 2021 has become roughly about 28,000 crores. So it's the problem has actually grown by about 6.5 times in that thing. It is probably a combination of both the reporting becoming that much more stronger, as also many of the old policies, the vintage policies, so to say, may be maturing, may have matured over these 7 years, and that may have also contributed to this particular amount. But you also made a very interesting observation, Jitin. You said that from 2014 onwards, policy issuance is accompanied by also registration of the bank account details.
Yes.
So is this problem from 2014 onwards, that is for policies that have been issued after 2014, is this lesser of a problem, and is this more of a problem to policies that were issued pre 2014? Would that be a way to characterize this problem?
To the extent yes and no. Why am I saying yes? Because if you see the need to have a bank account has grown in last 4 5 years, right? With Jandan coming into the play. Second, with lots of wallets started coming in, making its presence felt. And all these wallets and e-commerce platforms and other things necessitated the bank account details, right? And linked to the your mobile number, right? So we must, it is observed or it is seen in my view, last 3 4 years, we don't change bank account often now. Like we don't change mobile number, right? Because once you change this, there are a lot of operational hassles that individual will have to go through, right? But from way back in 2014, this was not the case. We never used to bother about closing the bank account or opening the bank account. We used to frequently, at a larger level, frequently people used to close the bank account, open new bank account, right? So I would say yes, it has helped us in reducing the unclaimed, and in my understanding, a lot of this problem is of past, right? As we go forward, these things should get reduced because of the the mentality or the habit of not closing the account and stick with the same account for years together now. So to answer your question, yes, it has helped to certain extent, but it needs a more, I would say, more success in the years coming forward.
Interesting. Before I continue with the webinar, let me also make a housekeeping announcement. So to the audience who are on the webinar today, if you have got any questions, please put them in our Q&A section, and we will be able to take a few of those questions with Jitin today during the course of the webinar itself. So please use the Q&A section and pose your questions. Thank you. So Jitin, coming back to the to characterization of this unclaimed problem, is this is the unclaimed portfolio at an insurance company level? Does it have a long tail which has got very small amounts, and then there's typically if you were to apply the 80-20 rule and say that would there be a 20% of your portfolio that would comprise of 80% of the unclaimed amounts, and then the 80% of the portfolio which will have very small tiny amounts? Or is this really a problem where you could literally divide the unclaimed amount and say it's more or less an average amount of say 10,000 rupees unclaimed or 20,000 rupees unclaimed? How would you characterize this?
Yeah, I think you are right. 80-20 is the norm, maybe 70-30, but there's a long tail of smaller amounts. So we must understand this unclaimed, how does it arise? It is basically out of the claims which are not settled or not encashed, the claim money, the excess premium, survival maturity, right? And at times we have seen, in my experience, large chunk of portfolio in terms of the number of policies is basically less than 1,000 rupees, which is due to the customer, correct? And at times, sheer laziness also may be playing a role, that a check of 500 rupees, customer or the policy doesn't want to encash it, right? So you are right, 20% of my unclaimed amount is the bigger chunk of my portfolio, and there is a long tail there. And I'm assuming this is true for all the insurance companies.
Okay, so for these the 20% and for the long tail, from an insurance company's standpoint, do you see? So you did mention that if the amount is too small, then just the cost benefit analysis may not be in favor of the policyholder to come to a branch, fill out a form, claim for that whatever 100 200 rupees. The time value of money may be much more than the 100 200 rupees that the person may likely get. But for the ones that really have a chunky amount pending, From an insurance company standpoint, have you thought about what are the key reasons why these chunky amounts are pending? And if you could also perhaps touch upon what steps have been taken at Aegon in terms of trying to address this problem so far.
Okay, so why this amount remains unpaid or unclaimed? There are broadly three reasons. One, the dependent or the family members don't know that such and such policy was taken, and therefore, the maturity and survival remains unpaid. That is, I would say, lack of awareness. Second, frequent changes of, as I mentioned earlier, the residential address in older times and the bank account details, right? So earlier we used to send checks, right? Because of that also, it used to remain unclaimed, right? Because most of the time the check used to come back as undelivered. And third, as I mentioned, the sheer amount of check, 200 rupees, 300 rupees, 500 rupees. These are the three reasons why it remains unclaimed when the amount is large, right? Second, what steps we have taken at Aegon Life? We have taken multiple steps. There are some regulatory steps that we need to observe, and there are at a company level, we all the insurance companies take steps to ensure that the bank account details are updated. So we keep reminding customers whenever they come for any policy servicing request that keep your bank account details updated with us. All our communication technically or will have this kind of disclaimer that keep updated your address and bank account details with us. Second, last 2 years we have created a focused group, right, within the customer service team, whose single goal is to reduce the amount year on year, and they work very closely with whatever avenues available to get the contact details of the customer, so that we can reach out, validate the customer details, and pay out the amount because it is rightly belonging to them and they should get it. We have also deployed on-field agencies with the address what is last available to us. They go to this place and try to identify the customer, get the KYC details, and update if it is the match is found. So these are the few steps which we have taken. Obviously, we have also now we are talking to CKYC. We get details from CKYC, updated details. IIB, I feel, or I think they have started recently that we give the required details to IIB, which is a regulated entity again, and they provide us the contact details if available with them. So these are some of the steps that we have taken to reach out to these customers who are not reachable for to us as of now.
That's interesting. Sandeep Malhotra from Max Life Insurance has got a comment, and he says unclaimed amounts has two broad constituents. One is amount not paid as refund, and the other one is annuity or maturity benefit not getting consumed by policyholder by purchasing annuity from same insurer or another insurer. And he's saying that perhaps this is a place that the regulator should also relook into.
Yeah, absolutely. Hi, Sandeep there. Sandeep, your question is right. As I said, our portfolio, and I'm sure it must be true for MaxLife as well, a huge part of portfolio, not in terms of the money, but number of policyholders, will be smaller amounts. And ideally, excess premium received or refund due for whatever reason. And that certainly today, obviously, the regulator is not taking any steps there to see how we can reduce. But definitely on both of these point, they need to relook at it. That is what the suggestion as an insurance companies we can give.
Interesting. I also want to see if there is any distinction that you see, Jitin, between insurance companies which have got a lineage or pedigree from a banking setup. There are a number of insurance companies which have within their conglomerate, within their group, a banking entity as well. Many of them are subsidiaries of the banking entity as well. And at least amongst the private insurers, one of the dominant sourcing channels for new policies has been the banca channel, the bank assurance channel. So for companies which have got a banking partner and who work very closely with a banking partner, is this a lesser of a problem or a bigger problem? And for companies that don't work with banking partners in such a close way, again, is there a distinction, or is this just a common problem for both, and having a very close relationship with a banking partner doesn't really make a difference?
See, there are two ways of looking at it, right? And you are right. Companies which are not working closely with the banking partners, they have a bigger problem than the companies working with banker partners, correct? And within that, there are regulations and rules that you cannot just run my database across your client base, right? So if I need to be a customer of both the insurance company as well as a bank, and that is where it will help, right? Uh, I cannot I cannot run my insurance company's database across the banking database. So that way, yes, because most of the sourcing also happens within that banker channel, problem will be little less unless the customer has closed the bank account and has not updated the bank account. That can be one scenario where they will face challenge. But overall, yes, the companies not working with banking partners has much more problem or issues with respect to resolving the unclaimed amount.
That's interesting. I should share that our analysis of the private sector insurers, since as CAMS Insurance Repository Services, we are very deeply invested in providing a solution to this vexed problem. Our analysis shows that actually some of the private insurers which have got very close banker relationships, which have got within their group a banking partner as well, are also insurance companies which have got the largest unclaimed amounts, right, in the private sector. So, at least in our sense, Jitin, from our view, I'm not too sure if having a banker partner and having a close working with the banker partner, and I think you touched upon the key issue there, that the banker partner and the insurance company are regulated by different regulators. There is a very thick wall of non-sharing of data, and therefore that by itself leads to some complexities in terms of resolving these kinds of monies to the rightful stakeholder, right?
Yeah.
But just thinking aloud, and if we were to look at this problem with a clean sheet, with a clean slate, and say, how can we address this? I mean, there is of course a legacy problem that we are trying to address, which is the 28,000 crore rupee problem. But to ensure that this does not remain a problem going forward as well, uh, there is definitely merit in thinking about this, at least at an industry level, isn't there? I mean, at least though insurance companies fiercely compete with one another in terms of acquiring new customers and retaining existing customers, but for problems such as these, unclaimed being one, isn't there merit in coming together and forming an industry utility to solve this? You did touch upon the CKYC and the Insurance Information Bureau as to perhaps a quasi industry utilities that are helping this. But essentially, given that this is at the root of this problem is contactability, right? So
Yeah.
contactability, if that gets addressed, then in some sense this problem also gets addressed. So if you were to really drill it down to first principles, you'll realize that this is perhaps contactability, as you rightly pointed out earlier. So is there merit in looking at this as an industry problem and coming together to solve this by collaborating?
Definitely, there is merit in this, but we are all bound by our own data privacy laws and other regulations around the data sharing, right? Having said that, as I mentioned earlier, the IIB, which is a regulated entity set up by IRDAI, all the insurance companies share a lot of data points with them, and their job and objective is to analyze this data and share reports with the regulator as well as the companies. Uh, Maybe one thing which we can do is that IIB can be a sole repository, right? Who can get access to, or companies can get access to that data and get the updated contact details. Because I'm sure on an average, maybe one person will have at least two insurance policies, let's assume. One with, let's say, Aegon Life and one with some other company. And he may have an active relationship with that other company, with which, I do not have that active relationship, and that money is lying in unclaimed. So that is one. IIB is one area where we can definitely leverage at an industry level, right? And there are other constraints also, and I will go beyond IIB or within regulated insurance industry. What we can do, I think there are other constraints also which prohibits at a industry level, not only insurance but at a BFSI sector level. Many things can be done, right? So at industry level, yes, I think IIB is one source where we can leverage the data what IIB gets from all the insurance companies. I don't think so. Sharing, having agreements or arrangements with individual companies, that will not be feasible or not advisable.
Yeah, that is true. I mean, that will just make it a little bit too complex to have a
Yeah.
many-to-many relationship. So I've got another question from Sohail Velshi from India First Life, and he talks about the check issued problem. He says, "How do we treat checks issued from unclaimed remaining stale?" Right? This is one bucket which keeps on growing every quarter. The regulator has also started questioning on this. So unclaimed, where you issue a check and the check just does not
Okay.
get presented. Is that a challenge that you see at Aegon as well? And if so, is there something that you are doing differently?
Uh, so as I said, at Aegon, more than 95% payment goes online now, right? There is some tail of 4 to 5%, which basically, may remain, correct? But we are moving towards 100% electronic payout, number one. Check remaining stale, so, as per the regulations, we are supposed to show it as unclaimed, even though we have complied or we have fulfilled our own obligation of cutting the check where the policy account details is not available. Not presenting, unfortunately, remains with unclaimed, and we need to report. So I don't think there is any standard or straightforward answer to this, Sohail.
Sohail also has a follow-up question. He says, what, in your opinion, Jitin, is an acceptable unclaimed amount threshold?
Oh, this is an interesting question. Yes, I fully agree that 100% we may not be able to achieve in near future, definitely. What we can look at policies which are getting sold or which were sold in last 2 3 years. Now that there are a lot of avenues, online or digital avenues available to trace the customer, to get the bank details. Uh, in my personal view, this can be, and depending upon the size of the company, should not be more than 2 to 3%, and that also is high, but should not be more than 2 3% at a percentage level.
So how do you derive 2 to 3% of what?
Of whatever amount at a company level is due to the policyholder, which is your survival, maturity, premium refunds, and nowadays ideally you need not have any excess premium, and that is one issue which I also keep struggling, that why should we have a excess premium from customers? Because if most of the payment now comes online, and in last 2 years in COVID, most of the payment, people have started using online channel or digital channels to make premium payments and a lot of other things. So you collect exact premium, and if there is any excess, you send it back to the same source. Correct. So that way, I think this can be resolved, and deriving value should be whatever is payable towards maturity or survival or surrender or auto surrender. All these, percentage of that can remain unclaimed, though not a desirable situation.
But just to be clear, from a regulatory standpoint, there's no minimum threshold. I mean, even 1 rupee due is due, and it has got to be treated just in the same way as probably a large amount, say a 1 lakh rupee unclaimed, is to be treated the same way as a 1 rupee unclaimed, right? Or is there?
Absolutely. No, in terms of the regulator, what they are, what we are doing is that any amount which remains unclaimed and as a value of more than 1,000, that amount we are required to disclose on our website, and we need to update on a half yearly basis, right? So somewhere we can take that analogy or that thing, saying that less than 1,000, even regulator understands that the cost benefit analysis or effort to reach out to this set of customers will be more than the payout itself. Having said that, I don't think so any regulator will and should do that, up to X amount, please forget. That should not be the norm, especially when now there are digital modes available to, send the money. So even one paisa can simply go through digital means without any, huge cost.
So, from an insurance company's standpoint, right? Just from solely looking at it from an insurance company, Jitin, what is the motivation for you? I mean, this is an unclaimed amount. So, for example, I am a policy holder. I have not claimed my amount. Now, you are regulatorily you're mandated to push it into a different account. You cannot use those funds, and if I don't claim, they're of no use to you. So, what is your motivation as an insurer to really locate me? I mean, suppose I've got 5,000 rupees due from Aegon, and let's assume that it is 5 years past the due date. You have parked it in an unclaimed amount, and you're saying, okay, Ravi, whenever you come and claim for it, so long as you produce the that you are indeed Ravi Kiran, your proof of identity, address, and bank accounts are given, I'll give you that money. But what is your motivation? Why do you need to look out for me?
I think single most motivation is the trust which the policyholder has put in insurance company, that I will keep paying premiums on time, right? At the end of the maturity or or when the as for the benefit of the policy, you are required to give me the benefit amount. Now that trust at the start of the contract has been reposed. For whatever reason, I am not in a position to connect with you or contact you, right? And that itself is my motivation, that the money should go to the right policy holder at the right time when he or she would have thought, right? Most of these investments are made towards certain goals, right? Maybe an education or purchase of car or marriage and all. At that point of time, if I'm not able to give, then I'm not doing a good service to my customer. And also my motivation is that customer confidence. The lesser the amount, more the confidence that I will be able to put in the customer. That is one. Second is, more importantly, it doesn't look good or sound good that as a company I do not have connect with my customer. I cannot contact my customer, right? And that itself is demotivating, correct? Especially when we are in a regulated and we are dealing public money. That should not be the case. I should find avenues or methods to keep reaching out to my customers, keep engaging with my customers, so that when the time comes, I am able to pay the rightful money to the customer.
They're two very interesting questions that have come up. One is around the NRI segment, right? And Sandeep from Max Life again asks that NRI unclaimed is actually going up quite a bit. Is this something that you are also seeing at Aegon? And is there something that you are doing to address this segment, the NRI segment, differently?
So at Aegon, we do not have that issue to a large extent. We have, but a very small amount or small proportion of the overall value. Now that's a challenge, because if we are not able to connect with my Indian customers who are within my jurisdiction for whatever reason, NRI payout or money lying for NRI customer is a challenge, and there are no straight answers of how do we resolve that. And it will keep on increasing as more and more people keep traveling abroad, and more people uh, they still feel that there is no need or there is no need to connect with insurance company for that payout, which is not a good and healthy scenario, right? But we have to live with it. Now the only way what going forward we can do is that get the bank account details upfront, right? Keep communicating with the customer, that you keep updating. Maybe from time to time, penny drop is a method which you can use to validate the operating bank account, number one. And whenever this NRI customer keeps coming to pay the renewal premium, right, remind him that he needs to keep the bank account details updated.
Interesting. I should tell you here, Jitin, that the digital unclaimed solution from CAMSREP, which is called as the Policy Genie Digital Unclaimed Solution, one of the segments that we have found a very effective solution is in the NRI segment. And to both use Jitin and to Sandeep, a place that we have found same because the digital footprint availability of an NRI customer, at least relatively speaking to a domestic customer, is actually far higher. And our, the artificial intelligence machine learning engine that we have created to address this problem, we have been able to get a much higher success rate with the NRI segment than with the domestic segment. But that apart, there are a couple of other questions, Jitin, again, very interesting. Pavitra from CAMSREP has asked this question saying, do you see any correlation between unclaimed money customers and customers who have not been very disciplined in terms of paying their renewal premium in the past? Is there any correlation that you have seen at all?
So it's an interesting question. We have not done this analysis, but definitely, a person who has not paid premium, renewal premium from time to time, the policy is in left state. I'm sure major amount belongs to them, or the reduced paid up or auto surrender kind of a payout which becomes due to this customer will remain in unclaimed. Surely because he has no connect, he has not paid premium, he has not touched base with the company, and all efforts from the company to reach out to these customers also would not have resulted. Yeah, so there can be correlation for this type of customers.
Uh, in the same line, there's a second question from Sridevi, again from CAMSREP, and her question is there any awareness campaign that has been planned to inform nominees about unclaimed status? I mean, as an insurance company, when somebody updates the nominee details, does the insurance company deal or inform or interact with the nominee directly, or is the interaction with nominee only in the case where the nominee is required to file a claim due to an unfortunate event?
Yeah, so largely, currently, largely the interaction comes only when there is a claim, not otherwise, because the contract of insurance is with policyholder. So interaction engagement happens with policyholder largely. But I've seen insurance companies have started understanding that it is important to keep nominee connect, so that in an unfortunate event the claim gets submitted quickly. Uh, uh, Also, there is we do not take most of the insurance companies. I am assuming the contact details or an email ID of nominee, right? Whatever, if you do not take that, and practically there's no way to reach out to the nominee.
That is a fair point. You talked about this contactability as the key to the unclaimed problem itself, and you touched upon earlier in your discussion, Jitin, that you've tried out quite a few things. You've tried out with external agencies who have got feet on the street, who go and look for the previously known address and so on and so forth. You said you also tried out with CKYC and the Insurance Information Bureau and several other agencies. What has been the success rate of all these initiatives? What has been the success rate of helping improve contactability?
So we have found, with respect to CKYC, also the CKYC is evolving platform, right? Uh, uh, so there the success rate is about 35-40% roughly. We get updated contact details from CKYC. With respect to IIB, again about 25-30%, not more than that. And on-field investigations, we do not get major success there. Because as I said, one of the reasons why amount remains unclaimed is the customer has moved from one place to another place without updating the data with the insurance company. So there we have found limited success, but I think CKYC, IIB are the sources where over a period of time this should result in more success to us or within the insurance sector.
That's interesting. So when an unclaimed policy holder is found and the claim gets processed, does the unclaimed policy holder just get what is due to him or her, or is there also the interest component that would have perhaps gotten accrued from the time the unclaimed amount fell due to the time it gets claimed? Is that also paid to the policy holder?
Yes, so regulatory we are required to maintain a separate unclaimed fund, and that fund gets, the money gets invested as per the investment pattern allowed by IRDAI. And whenever we are able to identify or locate a policyholder, the investment income earned, proportionate to the amount of the unclaimed of that particular policyholder, also gets paid to the policyholder. So technically, the investment income also gets paid along with the base amount.
From your standpoint, do keep a part of the unclaimed amount as an amount to go and locate unclaimed policyholders, or is that outside of the unclaimed amount itself? Just from the how you treat this, is that a separate expense item outside of the unclaimed amount, and the unclaimed amount remains untouched, or efforts put into locate unclaimed policy holders and the thing is also is adjusted against the interest earned or anything else of that nature?
So insurance companies are allowed to charge 20 basis point of the fund value, which is in the unclaimed, as a fund management charge or administration charge. I think from whatever that money which insurance companies can take out, a part of the expense definitely gets borne by it, right? But over and above that, obviously, we cannot charge from that amount. The company incurs its own amount, expense item, to locate the customers.
Just if you can perhaps explain to some of the audience what happens to the unclaimed amount. So say an unclaimed amount falls due today on the 8th of March 2022, what happens? So you you move it into the unclaimed separate unclaimed escrow account, and you therefore it remains unusable for the insurance company. But suppose you're unable to locate the policy holder, what happens? And is there, regulatorily or as a policy at Aegon, any fixed number or a minimum number of attempts that you make to locate the policy holder? When do you say, okay, I have tried everything and enough is enough, let's sing? And what happens at the end of, to that money as it ages?
So, our process starts 180 days prior to the maturity or survival benefit, correct? And we keep sending SMS, emails, letters to these policyholders to update their bank details, right? We also, if we have bank details available with us, we try and do penny drop, right? That is also, most of the insurance companies do that. And we keep sending reminders after reminders to the policyholders to keep updating the bank details, so that on the due date I am able to pay the maturity amount or survival amount or any other amount that is due to the customer. Now, if that doesn't happen, then regulatory this amount needs to go back to go to the unclaimed fund at the end of 180 days from the due date. So from if 8 March is your due date, 180 days from 8 March, the amount necessarily will have to go to the unclaimed bucket or the fund, and then it gets invested as per the investment pattern of the fund, correct? But in the this 180 days period as well, right? We keep chasing customer, we keep talking to customers if contactability is available to get the bank details so that the payout is made, right? So the process doesn't stop there. While accounting wise the money moves to unclaimed fund and it starts earning investment income, our efforts are continuously on to reach out to this customer, get the bank details and pay out the money. So answer to your question, yes, the money gets parked after the 180-day completion, right? But the effort doesn't stop once the amount is moved to unclaimed.
And at the end of 10 years, it gets moved from the unclaimed escrow account into the SCWF, the Senior Citizens Welfare Fund created by the Government of India, right?
Yeah, so there also we are required to transfer after the 10th year completion, but still the policyholder can claim this amount from us for next 15 years. So technically, once it amount becomes due up to 25 years, the policyholder can come to the insurance company and claim the amount.
So you have a way of getting it back from the SCWF, even from the 10th anniversary to the 25th anniversary.
So we need to do adjustments that during the year, if such amount which has already been transferred, we can net it off, and the net of amount can go to the fund.
So that was one of the questions asked by Prabhakaran Palni. I've got one other question, which is there misselling of policies versus unclaimed? Is there a correlation?
So I'm not getting the question.
Is there so probably somebody had been missold, saying maybe the person is not aware that there is an amount that would come or at the time of maturity. Probably that person thought that there would be no maturity payment that would be applicable in this policy. So there could be a misselling, or there could be varied forms of misselling. Would that also qualify as a reason for unclaimed?
So, I'm taking assumption here that if a person feels that he has been missold, definitely he's not going to pay the second premium or third premium, right? And then he at times will forget that money lost, right? And he will not bother to recover this money, or whatever efforts he has made, he has not been successful to for that, and then he typically forgets this amount, right? Uh, but as an insurance company, even if the left policy, there will be some amount due, depending upon the policy TNC. And at that time, this amount I am not able to connect with the customer, and therefore eventually this will go to unclaimed. Yeah, so mis-selling will play a role or is playing a role to some extent, where customer forgets the amount, one-time amount paid after battling to get the refund.
Interesting. Jitin, you talked about the foresight of the regulator in coming out with greater transparency requirements right in 2010, and much more clearer guidelines in 2014, and so on and so forth. Yet this problem continues to grow, and you also talked that there may be more things that ought to be done to make unclaimed, or to really eradicate unclaimed. I mean, the fact that there's still unclaimed itself is something in today's day and age. Unclaimed should be zero. Why should there be any unclaimed, in a matter of speaking, right? So what do you think can be done at the governmental level or at the regulatory level to address this problem, and right in the to sort of nip it in the bud for the problem going forward, and to remediate this problem for whatever it is, whatever has been the source of it, to make it a 28,000 crore problem today?
So two solutions, or more than two solutions, but immediate solution can be that insurance repositories is part of the ecosystem within the insurance industry. Insurance repositories. Now, as I mentioned in the beginning, that the public listed companies were able to solve this problem because of the depository ecosystem created by NSD and CDSL, and all the bank accounts are now linked with that. So my guess is that the problem there is very minimum now, right? That is one. So maybe more use of insurance repositories for crediting the policy and linking the insurance repository account with the bank account of the customer, and from time to time keep validating it, because unlike the shares, we do not use the bank account details quite often, right? So that is one, within the industry, this can be a solution. Second solution, at a government level, there are a lot of things. So currently, SEBI, IRDA, PFRDA, EPFO, all of these regulators, they are operating differently. So, for example, I cannot go to a CAMS mutual fund KRA, right, or an EPFO with my customer base, and say that, hey, if you have a mutual fund account of this PAN number, can you give me the updated contact details? Because in most of the mutual fund accounts, the SIP keeps running, or share trading keeps happening, right? For the depository accounts, I cannot go to a bank, right? With this, say that if you have account with this PAN number, can you give me the updated details? So I think between the regulators and eventually, it is all managed or sits with the Ministry of Finance. They can come up with some kind of a solution where data exchange at a regulatory level happens, right? Because there are active mutual fund accounts in crores, active demat account now more than 8 crore demat accounts, right? Banks have Janadhan. There are about more than 29 crores Janadhan accounts, largely focusing catering to the semi-urban, semi-rural, and semi-urban population. We can get this access. The only need is that regulatory we are not allowed to connect with each other, and that's the hindrance I say. Once it happens, so I think this problem can be solved. EPFO is also a source, right?
Oh, absolutely, yes.
So at government level, they need to create a system or enable a system where we can exchange for the purpose of unclaimed, so that this problem gets solved.
Is there anything afoot in that regard, as you are aware, to really help address some of these problems, which are common across the BFSI sector, the financial services sector, uh, which requires an interregulatory collaboration mechanism to be established? Is there any moves afoot to address this kind of thing?
I am not aware any such move. Maybe in the past some representation would have gone, but I don't think so. Currently, there is active, process or steps being taken to ensure that the dependency of different regulators are killed or solved.
Great. In fact, like I was telling earlier, the Policy Genie digital unclaimed solution that CAMSTEP has come up with, our success rates have been typically in the range of 11 to 15% for up to a 10-year-old vintage policy. When I say 10-year-old, 10-year, the maturity date being up to about 10 years. When the maturity date is beyond 10 years, the success rates slightly falls down. And for maturity rates, which are, or sorry, the contactability rates for policies which have matured in less than 10 years, our success rates have been actually far higher. Aegon has been, one of the early adopters of this digital unclaimed solution from CAMS Insurance Repository, which is the Policy Genie digital unclaimed solution. What has been your experience, using this solution? I think you have seen some successes in the last few weeks.
Yeah, I think as you rightly said that policies where at Aegon level we have done our own analysis or efforts to reach out to these customers, the success is little less. But policies where future payout is likely to happen and we do not have bank details, their success is much
Higher.
higher, right? But overall, I would say that it is helping at least reducing that count. That helps.
When you are able to revive any of these policies, Jitin, do you also use that as an opportunity to re engage with the customer and perhaps see if there's an opportunity to sell another policy, or revive that customer as another as a customer for Aegon? Is that also, or is the motivation strictly and purely only to pay the maturity amount?
Yeah, that's the primary intent, that pay the maturity amount. And obviously, no company would like to, or company would like to, keep engaging with the customers. If the policy, first policy is matured, expired, then definitely we would like to retain the customer. Yeah. So that effort also takes place at times, but not actively.
Interesting. Uh, Jitin, I was just looking at the questions that we got from the audience, and I think we have covered all the questions that we got from the audience as well. If you have any closing remark on Unclaimed and the future of Unclaimed, my dream and imagination is that Unclaimed should cease to be a problem. But let me hear from you what your closing remarks would be.
Yeah, I think that should be the dream of all the companies and individuals working for companies that there should not be unclaimed and money should go to the rightful owner of the money